India Economics.
Abhishek, who's the Secretary of the Department of Industrial Policy and Promotion. Mr. Abhishek, pleasure to have you with us. Radhika Agarwal, CEO of ShopClues, and a well-known e-commerce company which is doing extremely well. Radhika, thank you so much indeed. Mr. Adi Godrej, Chairman of Godrej Group and one of the most respected business leaders in this country. Mr. Godrej, thank you so much indeed. And Keiko Honda, who's from the multilateral investment guarantee agency, or MIGA, which is part of the World Bank Group. He's Executive Vice President and CEO. Keiko, thank you so much indeed for joining us. I'm going to wait for about 10 seconds before I start for people to just settle down. Ramesh Abhishek, who's the Secretary of the Department of Industrial Policy and Promotion. Mr. Abhishek, pleasure to have you with us. Radhika Agarwal, CEO of ShopClues, and a well-known e-commerce company which is doing extremely well. Radhika, thank you so much indeed. Mr. Adi Godrej, Chairman of Godrej Group and one of the most respected business leaders in this country. Mr. Godrej, thank you so much indeed. And Keiko Honda, who's from the multilateral investment guarantee agency, or MIGA, which is part of the World Bank Group. He's Executive Vice President and CEO. Keiko, thank you so much indeed for joining us. I'm going to wait for about 10 seconds before I start for people to just settle down. All right. Thank you all for joining us today on this special panel discussion at the World Economic Forum India Economic Summit. Without further ado, let me begin this given the macroeconomic indicators have turned from being positive slightly to an area of doubt. What is your assessment of what's going on in the economy and the reforms that have already been put in place?
I think the doubt has started when we published the April-June GDP growth figures, which was at a low level of 5.7%. In my view, during April and May, we had reasonable growth. We don't publish monthly GDP growth figures. But in June, we had a rather low growth rate because that was a month preceding the introduction of GST. And in GST, in manufacturing items, there were lower rates than the earlier combination of excise duty and VAT. So obviously there was considerable destocking by the trade, and there was considerably lower production shown. Production might have taken place, but it was not shown. Let me explain. In our case, one of our major items in our largest company called Godrej Consumer Products is toilet soap. The GST rate on toilet soap is about 7 to 8% lower than the earlier combination of excise duty and VAT. We are also tight on capacity because demand has turned very good. So we couldn't stop production in June. We continued producing, but cleared the goods only in July, because obviously if we had cleared it earlier, our tax costs would have been much higher. So obviously we showed much less production than we normally do. So I think that was the aberration. I expect a reasonably good growth rate in the July-September quarter, and I expect a good growth rate in the second half. Now, you mentioned what does India need to do? We must remember that post the liberalization of the economy in 1991, 25 years ago, a little more now, this has been the biggest single economic reform, GST. And it will add a lot of value to India's GDP growth rate. And we should wait a little and see. And I think people are being unnecessarily pessimistic. Already, if you look at the revenue collection under GST in July and August, the first 2 months of GST, both months have been well above 1/12, or each month has been well above 1/12 of the earlier annual prediction. And there are still a lot of teething problems which are being gradually resolved. I think they'll get resolved soon. People will get used to it. We must also remember that this is the first time that anybody has put their major indirect tax system entirely on the internet. Collection is not based on paperwork. So I feel the economy is doing much better than is generally felt, and I think we'll see the results of that soon.
Mr. Godrej, since you focus so much on GST, Radhika, come in on this. When you talk to smaller suppliers for your own business, what's the sense that we get? Because what we hear is that there are operational challenges and so on. What are you hearing on the ground?
They have teething problems, especially since everything is automated. They need good consultants. People have to appoint an outside chartered accountant to advise them,
Sure.
which they weren't necessarily doing earlier. They're also getting used to it because some of the teething problems came from things which were, the government gave time to file the returns, etc., etc. I think more teething problems will have to be attended to by the government.
Sure.
And one of the problems is, if people were in businesses where they evaded taxes in the past,
That's over.
that will not be possible to do under GST.
Okay. Radhika, you want to come quickly?
I would completely agree with that. And we work with about 650,000 small, medium, micro, small enterprises, right? These are small merchants, traders who are being forced, or literally dragged, kicking and screaming into the digital economy and into the taxed economy. And we saw exactly everything that Mr. Godrej mentioned about the GDP numbers. We saw it on a smaller scale at the grassroots, where the first couple of weeks in June, people just took a step back. Our merchants took a step back. They did not want to participate in any kind of commercial activities because they were just waiting and watching, trying to figure out, how GST is going to impact their business on a day-to-day basis. And we worked very closely with them. We worked with the government in providing them services that can get them GST numbers. What is it that they need? And I have to tell you that about 60% of all our merchants are GST enabled today. That number in itself might not sound very impressive, but it is far better than we had estimated it to be. Remember, go back to the same statement that this is a segment that was not in the taxed economy.
So the tax net is now bigger.
Much larger, much larger.
Okay. The other aspect, and you heard the Prime Minister last evening making a fairly strong defense of the changes that have been made. Mr. Abhishek, if you look at the growth numbers, one aspect of the growth number, one reason people have been pointing out is the export slowdown. As government, what is the thinking of ensuring that exports are back on track?
I'll seek your indulgence to take this debate slightly away. We are only looking at the GDP numbers of 5.7, 6, 7, 7.5 and all that. But why do we think that that is all the potential that India has? Why can't we do 9, 10, 11, 12? So if the GDP numbers are 7.6, everyone is happy. So I would like to point out that what this government has been doing since last 3 years plus, as our Prime Minister has also pointed out several things, is to identify the major challenges to making our country competitive. You look at the infrastructure. We have a creaking infrastructure, inadequate infrastructure, the investment that are being made, project implementation that is being made. Look at the taxes. Direct tax, we have one of the highest rates in the world, not competitive, but it is offset by huge number of exemptions. Now the government finance minister has made a roadmap to phase out the exemptions and bring down the corporate tax rate. Indirect tax, you have heard what a game-changing reform it is.
Sure.
Nobody had heard about the issue of concept of ease of doing business in this country perhaps before 2014. Today, we have made this a prime agenda of the government so that we bring down the cost of doing business in the country. We have a huge young population with demographic dividend, but where are the skilled people? This government has trained about 12 million people in the last 3 years. So all these things combined, startups, as a matter of fact, they are making our economy more competitive. Our cost of logistics is 14% of GDP. It is 7% in China. How do you expect to compete? Your R&D spend is less than 1%. Where is the innovation? I think all these things have to be looked at together. GDP numbers, as Mr. Godrej has correctly pointed out, 1 quarter, 2 quarter, or 1 year is one thing. But if you look at slightly bigger view, 30,000 feet view, then you will see that the changes that are required in this country are being actually done and addressed. But do you really expect that all these things will happen in 1 year, 2 years? It will not.
Okay. Any specific point you want to make on exports?
See, so far the exports are concerned. The government made this provision in GST that they have to pay duties in the beginning on all the imports of raw materials and inputs. And after they manufacture and export, they can get credit. Now, suddenly, the exporters were stuck with a working capital requirement. This issue was known. This was flagged to the GST Council. But at that time, they took a view that, let them pay and we'll try to expedite the refund. Now, the issues have come up again and the government is looking at it. But, making exports competitive also is the same issue. The GST is actually reducing the cost of transportation by 30% already in such a short time.
Sure.
All the checkposts are gone. You ask those hundreds of thousands of truck drivers, how they were stopping everywhere and paying bribes in every checkpost. See, the kind of changes that are being made are so fundamental that let's not, I will recommend not to worry about 1 or 2 quarter numbers.
Okay. Ms. Honda, as an outsider looking at the India story, what are investors telling you? As somebody who looks at investments into this part of the world, what to your mind are key priorities for India? Many people say that governance framework of India is resistant to change. Are you seeing that changing?
Well, first of all, I think investors having a middle to longer term view. Investors not necessarily looking month by month GDP growth, quarter by quarter. When we look at the demographics of India, I have to tell you, most of the ministers of finance of the rest of the world, they must be thinking, they were the minister of finance of this country. So that's one. Demographics is the one determining economic growth. And in demographics, the one, it's very difficult to change quickly. I'm originally from Japan. Demographics is tough. India is the completely opposite part. That gives us definitely the reasons a lot of cross-border private investors to look at India. At the same time, also I have to tell you one thing. I think there are a lot of things to be done in this country. For example, India has 300 million people living without access to the power. And over 70 million people living without access to the clean water. This is opportunity for the private investors. At the same time, this is the area India can improve, then they can attract more private investors.
Mr. Godrej, you run a large conglomerate across multiple sectors. This point about ease of doing business, has that tangibly changed in the last couple of years?
Let's put it this way. Ease of doing business has been very poor in India, historically. It comes from our socialist days. In 91, we made some improvements, and that improved ease of doing business. I think this government has also taken many steps which have improved the ease of doing business. But I would still feel that the ease of doing business in India needs much further improvement. And we should keep taking steps. Unfortunately, we have an attitude and a mentality that government needs to interfere in things for things to improve. It is not only a government mentality, I think it's general populace who has that mentality. We must get over it. And whenever, if you look at the performance of the private sector in most items, it does better than when government handles it. And this disinvestment and privatization, I think, will go a long way. The last NDA government privatized quite a few enterprises which are doing very well today. And we should similarly look at that. It gets revenue now for the government, and it gets better performance in the future. So there's a lot of opportunity to leverage that thinking.
So Abhishek, when we talk about reforms, reforms have been synonymous with basically fixing, red tape or fixing legacy issues. That's what reforms have been so far, barring what we've seen with GST and so on. Do you think government is open to changing the way government functions?
Absolutely. As a matter of fact, I couldn't agree more with Mr. Godrej. See, today, in this year, all the FDI that has come, 97% of that has come under the automatic route, without need for any approval. You look at the historical data, so the complete change in mindset also. We are doing ranking of states on ease of doing business. We are asking them, and they are implementing actually, that why do you need approval at all? Can you just inform and that's it? Or if you don't get approval in certain time, 30 days and all that, it is deemed to be approved. So technology-driven governance, completely removing the personal interface between the citizens and the government authorities or the municipal authorities, time-bound approvals, deemed approvals, all these things are being advocated. Risk-based inspections, risk-based approvals. Earlier, 100% of the consignments, import consignments were inspected by the customs people and the various agencies, depending on their product. Today, only 10% are being inspected, which is the global risk management now. Can you imagine 100% to 10%? This is the change in mindset. Hardly any direct port delivery was being given in this country at all. Now, in last 1 year, it has gone up to 30% in the Jawaharlal Nehru Port Trust. 30%. We want them to take it to 70%. So the ease of doing business work, the mindset change has started. It's going to take time. But the initial period has been the toughest.
Radhika, you want to come in on the ease of doing business?
Yes, I do want to add a few things over here. And I heard Mr. Godrej's point of view on, how things have changed from 91, but I can tell you that we've been in business in this country for the last 6 years. After living in the US for about 15 years, we came back. And things have changed, and especially when you look at the consumer internet or the startup ecosystem there is, and we work closely with Mr. Abhishek on this, the change has been that of day and night, literally. When we started the company in 2011, it took us about 3 months to get approval to just get the company off the ground. Now that is done in less than a day. If you're doing a startup here, a technology startup, it's less than a day. And why are we just looking at economic reforms, right? Let's look at social reforms. Triple talaq, that's gone away. Let's look at reforms that are happening on the infrastructure basis as well. Jam. It's changed the way our consumer and these are the grassroots consumers, these are the consumers, the mass consumers that are there. They are interacting with us. It's changed the way they are interacting with the government itself. And now just take a 30,000 view. The first time ever the government has actually taken a step back and had what they call a startup initiative, right? Startup India, Stand Up India. Initiatives where they are ready to talk to entrepreneurs like me, talk to other entrepreneurs who are trying to do something different, who are trying to disrupt the way business is done in India. The Prime Minister actually spent more than a week with us in this program called the Champions of Change, where there were 200 of us, the new economy or the technology startup entrepreneurs, where we just brainstormed on the ideas about how we can make policy changes in India, whether that is around health, whether that is around travel, tourism. Nothing has come out of it as yet, but this has just happened. And it's happened for the first time. So going back to the attitude being right, to the mindset being right, we are definitely starting on the right foot. Okay. Can we expect changes to happen overnight? No. For reform to get to transform, there is going to be a time period. We should look at a 2030 time period instead of looking at it, how much change has happened this quarter, next quarter. It's not going to happen overnight. It is going to be an up and down cycle. But we are all headed in the right direction, which is much more than we've been so far.
Okay.
Very optimistic
That's
about
an optimistic
that.
point to make. Keiko, Radhika referred to infrastructure, and one of the objectives that you look at is bridging infrastructure investment gaps. And we have a large gap here in India. Do you see, and some of the transformative ideas need to come in the area of infrastructure. Would you look at funding something here in India? Is there something that interests you? What is your assessment of the gap that is here?
Okay. Well, and some people, not only necessarily India, but like some people think what's missing is the financing. So therefore, those people kind of asking us, can you widening or bring different types of investors such as pension fund or insurance company? However, I have a different view. I think what's missing is not a financing. What's missing is the investable project. What I'm kind of recommending, not only India, but all other middle-income countries have a bright future, to government, development of financial institutions like us and private investors to work together to identify potential projects that we can work together, especially like identify the project to leverage private investors to invest in, not necessarily using a lot of balance sheet of the government.
Ms. Godrej, her point is that capital is not the problem. There needs to be investable projects. You want to comment on that? Aren't we seeing a problem of capital as well in India?
Well, it depends on how you look at it. There was a period where people in business became very optimistic and invested a lot of money and invested a lot of borrowed funds. I think we should always keep an eye on the ratio between borrowed funds and equity funds. It's a common lesson learned globally over the years, and not rely excessively in good times on borrowed funds. Today we are seeing tremendous appreciation of that in terms of large collections of large amounts of IPOs being transacted. Equity is rising, and that's the way to finance the future. And I agree that we should have investments in projects, not necessarily rely on the government, because there's a limit to what the government can do if the fiscal balance has to be maintained. But I think if we follow some of these fundamental guidelines, I think we can do extremely well in the future.
Mr. Abhishek, I want to shift focus on another point, and the topic of this conversation really is about how can we make reforms that's broad-based and inclusive. We are living in one of the most unequal societies in the world, and reforms tend to benefit already those who have benefited. And I want to specifically point about agriculture. And the case that's before us is agriculture as a job, as a profession, is becoming unviable, unproductive. Incomes are not growing. How does one, create reforms there?
Agriculture is one of the most important priorities for the government, because still we have a majority of our population living off agriculture. See, there are so many challenges in agriculture. One was the dependence on monsoons and the risks associated with any crop. The crop insurance scheme, which have been brought in by the government, gives much better coverage in terms of risks, and a lot of people are availing of it. One of the challenges of agriculture is marketing, because if the farmer doesn't get a good price, obviously they no incentive to produce. Now this electronic national e-market that is being set in motion in about 600 mandis of the country. Actually, Karnataka is the pioneer in this regard. I think will actually give the farmers a better price. But then the state government has a major role in agriculture. Remember that central government has a limited role in many areas, including agriculture. Perhaps the farmer is the only person in the country who needs a permission to, or who has a restriction to sell his produce. Nobody else has that restriction. He can't sell it to somebody who comes to his house or his field. He has to go to this particular market. There are so many restrictions. You cannot do contract farming. So the kind of restrictions that have been put on the farmers need to be removed by the states. Central government has been recommending it and advocating it for a long time. We need to improve the marketing. So I think agriculture, a lot of initiatives are being taken. Doubling the farmers' income by 2022 is one of the major goals. Government has spent huge amount of money in the last 2 years on completing the pending irrigation projects because we need to improve the irrigation part of it. As a matter of fact, in procurement, to give a better price, for the first time, government procured 2 million tons of pulses because the pulses production went up and all that. So a lot of interventions are being done. But agriculture is definitely the most important area. And I would say, from my own experience of regulating futures market earlier, is that the marketing is the key and that the state governments have a major role in that.
Sure.
Talking about agriculture, this government initiative to double the income of the agriculturists in 5 years is a very good initiative. But besides agriculture, we need to pay a lot of attention to animal husbandry. Not just dairy, but poultry, fisheries, prawn, for example. Animal husbandry can add a lot of income to agricultural family, and animal husbandry promotion tends to include a lot of females in the household into the economy. It will add a lot of value to the economy, and I think if we concentrate on that, we will do a good job in our country.
Okay, I want to turn this focus of this conversation to something related. Agriculture being one of the largest employers, and the key question of jobs. If we have to bring in inclusive growth, it really boils down to can we create more jobs? There is no comprehensive data in this country telling us what the unemployment numbers are, which is primarily the problem. What should government be doing? And then we can go to the private sector.
The creation of jobs, of course,
Yes.
is the most important thing. Now, the jobs, it could be also self-employment opportunities.
Yes.
It need not be that someone
Somebody
is
has to
working
give
for
you
a salary.
Yeah.
So the government has a policy of looking at both. See, now most of the jobs are actually getting created in the services sector. Because in manufacturing, there is a limit to either you automate, either you introduce technology. So most of our interventions are capital intensive, except in some sectors like textiles and leather footwear, gems and jewelry, which are still labor intensive industries. But there we also need to have better FTAs to get better market for our products. So I think most of the jobs get created in services sector. And since we don't have a very good count of that, look at e-commerce. Look at the opportunities and the jobs being created by e-commerce. There are companies which are creating hundreds and thousands of jobs, each of them. If Radhika is sourcing these products on her platform from 100,000 small producers and traders, look at the kind of job creation that is taking place. And in job creation, as I said, please include the income generating opportunities. Look at the Mudra and Stand Up India program. You have got crores of people have got loan and funding. I think we really need to look at job profiles differently, not just the kind of jobs that are created in a particular manufacturing sector or services sector. Basically, we need income generating opportunities either by way of self-employment or by way of a salaried employment.
Radhika, you want to come in on this and explain to us some of the experience that you have.
So, pretty much on the cusp of what Mr. Godrej and Mr. Abhishek said, is that, about 45% of the population of our country is women, and to be able to bring them into the organized economy, to bring them into the job sector has been a huge challenge. And it's something that I feel very personally, very strongly about. And through e-commerce as well, just we work with Facebook very closely, and a lot of the private sector companies have come in a big way to provide skill development to these to women that are sitting in rural India, to women that are sitting in urban areas that have not had exposure to the job market, where they can come in and work from home opportunities as well. And I think very similar to what Mr. Abhishek said, right? 600,000 merchants on the platform. Each merchant has about 5 employees who work with them. If they are selling offline, the minute they start selling online, they add about 2 to 3 more employees. those are significant amount of jobs that are created just by someone who caters to about 10%, 10 to 12% of the unit shipment in the entire e-commerce space. So as the digital economy becomes more pervasive, job growth goes up, and this is just this is just the trade sector that I'm talking about. I'm not talking about manufacturing as yet, which in itself has taken on a different growth. So I think with all the Startup India, Stand Up India, we are on the cusp of that. We work and the skill development program. We are seeing jobs grow pretty rapidly. Unfortunately for us, it's the same thing. We don't know what is the right number to look at to see what our contribution to the economy has been. And we can talk about that and we can move forward on that. So it's lack of data or metrics more than anything else.
Sure.
But on the grassroots level, there have been changes for sure.
Ms. Honda, specifically about jobless growth, and this is not an India-specific phenomenon, is it?
Jobless growth, we actually observe in several different countries. Also at the same time, I think there is not only one path to create more jobs. Historically, agricultural created a lot of jobs. Then a second, manufacturing created a lot of jobs. Now, as Mr. Secretary just mentioned, service industry creating a lot of jobs. But going forward, there may be some other destructive technologies with destructive service model may create jobs. And then India may be very well positioned because of the current demographics, language proficiencies, and also the positioning in terms of the geopolitical positioning. At the same time, if I may, can suggest one thing to the India. Now I'm very, very, very glad to learn today, Indian government is welcoming more foreign direct investment. Some of the foreign direct investors who actually have a cutting-edge technology, cutting-edge business model, are looking at opportunity in India. Can we consider to leverage them to create different types of jobs here and then different types of vocational training to have them in here?
Sure.
Just talking about the various opportunities, we have been trying to promote Japanese investments in India. There are only 20,000 Japanese language knowing people in India. And we have $26 billion of Japanese investment. You know how many Japanese knowing people are there in China? 20 million. And no wonder they have $300 billion plus FDI from Japan in China. See, we have not focused on these areas. Now we are doing that now. So look at the kind of job opportunities there in just knowing the languages of these countries. We are trying now to have more language training for Japanese, Chinese, for Korean and languages, where we are actually getting a lot of investment and we can get much more. Just one area. But then these things have been neglected over decades. So, but I think now that we have started our attention on that, many of these opportunities will be created.
Mr. Godrej, coming back to the point about jobs, what can private sector do?
No, a lot of things. For example, one side we say that there are people who are unable to get jobs. On the other side, we say there are a lot of job opportunities which are going unfilled. For example, we have an acute shortage in the health and education sector of people. Now there's a new scheme being introduced of having school teachers being trained without necessarily getting a Bachelor of Teaching degree. That can add a lot of value. We need more teachers, we need more health workers, etc. So we should match people's skills with the needs. And I like to sometimes say there is no unemployment in India, only unemployability. There are many sectors where we can't get people. And we got to work hard to see that they match. For example, with the corporate social responsibility program started, a lot of people are training a lot of people, which helps their own businesses. We are, for example, in our group, training housewives to start hair salons in their homes. We are leaders in the hair color business in India. It's helping our business. It's creating a lot of employment, self-employment, women employment. So there are lots of ways to push this, but we must work hard at doing what is needed.
Okay. My last sort of question before I throw it out to the audience. Mr. Abhishek, GST is done. From a structural reform standpoint, what next?
I think this mindset change is very critical. A lot of mindset change has taken place in last 3 years. Since my department, we work very closely with all ministries, departments, and states in improving ease of doing business, investment promotion, and so on. I think we really need to carry it forward much more, because that is where a lot of things get stuck. A lot of people ask us, and we deal with hundreds and hundreds of such things every week, every month, that things are getting stuck in so many places. I think it's going to take some time, but we are on the job. But all the things that have been started, see that this government is very flexible and responsive. It doesn't claim that it knows all the solutions. It doesn't say that it has all the answers. That's why we keep talking to stakeholders and checking with them what should be done. You want to improve chemical sector, you want to improve the retail sector, what should be done? And then the government is very proactive in taking those decisions. I think this responsiveness of the government, sensitivity, and this determination that we need to create a new India where the mindset change is really the precondition. So I think all these things we will take it forward. So on startups, I personally have had at least 100 meetings with the startups and the ecosystem partners in last 1 year, just to understand. We fight for them, we fight for the investors with other departments, whether it's e-pharmacy or any other issue, that why are you having this regulation on mobility, on any issue.
Sure.
So I think this work has to go on, and this mindset change has to percolate down to every level.
Radhika, what next would you like to see in India?
One thing that has got a lot of negative press, but I think it's going to be a game changer going forward and so far as well, is the cashless economy. UPI, I feel it's not got its share, it's not got its due. It's going to change the way business is done. I think financial inclusion, economic inclusion, all of that, when you look at the rural economy and their participation into everything that we are doing in the urban areas is going to be phenomenal. I'm very, very excited about that, and I think that's going to change things significantly.
Mr. Godrej?
Yeah, whilst I agree on this cashless economy, or the movement towards that, helping in a lot of sectors, we have to be careful of one thing. We sometimes forget that cash as a mode of payment is the only thing which is free. Everything else costs money. All over the world, cash is subsidized by government. And we learnt it the hard way during the demonetization period, when wholesalers who do a lot of sales between our distributors and the millions of retailers in India had difficulty because of non-availability of cash. I was myself surprised to find out that the gross margin of our wholesalers is 1.5%, gross margin. Any mode of payment other than cash doesn't work for them. Not to evade taxes, but from a cost point of view. Now we have to bear in mind, if we can find other modes of payment where, like cash, is subsidized by government, then it could be very easily adopted for such activities.
And hopefully UPI should solve that.
Okay. If I just push that point a little further, other than the cash economy, of course, would you say labor is an area that requires reform?
Yes, I think so. And it requires reform because we sometimes forget, and we talk of robotics and etc. and artificial intelligence and feel that it will affect us negatively. All growth in the world has come from productivity increases. So we should welcome productivity increases. Only thing is we should adjust to the productivity increases and see that the growth added takes care of the jobs that might get displaced. So yes, I feel we should be positive and work towards strong development in these areas. We get too negative sometimes about global developments and about the trend.
Okay, let me get a little negative now. Keiko, risks. You look at risk profile of countries across the world. If you look at India, what to your mind are risks to this story?
Well, India is not a high-risk country among the countries that we serve. That's I have to say that. But at the same time, if India wants to optimize the potential, realize the potential, of course there is some room to improve. For example, if you really want to enhance this infrastructure, government cannot really be responsible for building every single power stations, every single road, every single bridges, and you probably want to leverage some private, including foreign private investors.
Sure.
Then those foreign private investors have perceived risk. For example, if they really need to going into like a long term, such as 15 to 20 years of power purchase agreement with some of the SOE of the government, they have to kind of think about potential like breach of contract by governments. I'm not really saying one central governments, maybe regional governments, or maybe SOE. I think those risks, what I'm recommending to the private investor is slice the risk and find a way to mitigate the risk. For example, one thing, I'm so sorry, I have to kind of also introduce MIGA. MIGA provide credit enhancement for the government. At the same time, MIGA also provide potential breach of the governments. If it's perceived risk, we cover, then they're willing to come on.
Mr. Abhishek, risks to the story?
As I said, you look at the macroeconomic fundamentals, so which are very strong. You look at the reform story, which is very robust and is gaining strength, and look at the audacity of the government to do reforms. No government perhaps would have dared to bring down the rate of savings, GPF, PPF and all that. But how do you bring the cost of capital in the country if you don't bring down those rates? This government actually took the bull by the horn and did that. Demonetization. People may have different versions and stories, but the fact is that no one can question the audacity of that reform. And similarly, GST. The government could have taken the easier option, I mean, life was going on. And why have all these conversations and bad press? But the government has taken that risk. So here actually all the risks in this country are being taken by the government today.
Okay. On that note, I'm throwing it open to the audience. If you have a question, please raise your hand. Introduce yourself, and I'll send a mic across to you. I'll come to the gentleman in the third row. Can you pass the mic here, please? Yeah. If you can stand up and introduce yourself.
Rajiv, PCCW.
Sure.
My question is to Ramesh and Radhika, and it pertains to broadband and what reforms can we do to bring broadband to the households, right? I think Adi mentioned that this is the first tax, GST is the first tax when everything is on the internet, and Radhika's entire business model is predicated on internet being available to every household in the country, and we are in trouble there. Last 1 year has been good on the telecom side, but telecom is now going into serious red waters, and investment has pretty much stopped, except for one player. Right? On fixed line, we've got an atrocious story to tell in India. Maybe 20 million connections, most of it in 512 kbps, and government sector connections, really, right? What can be done? Unless we get this internet to all the households, 280 million households across the country, we can't just sit in Bombays and Delhis and 50 cities in India and just assume that India is going to be these 50 cities, and 9,000 cities and 6 lakh villages. How are we going to do it?
Sure. You want to take that?
Okay. See, if you look at the optical fiber network under the extending the broadband in the country, less than 100 kilometers of optical fiber network was laid when this government came to power. Today, we have actually connected more than 100,000 gram panchayats in the country with broadband network. This is the kind of work that has happened in the last 1.5 to 2 years in extending the optical fiber network. Now, what is being done in the second phase is to connect the rest 150,000 panchayats, and the various states have various models. So now we have a flexible model. You want to go underground, overground, optical fiber network, VSAT, all models, Wi-Fi, everything is being done, and the government of India is actually supporting the states in doing it. For us, it's very important. Our digital infrastructure is key to our economy and all the growth that we are looking at. So I think you see the amount of work that has been done on extending optical fiber network is quite staggering, actually.
I just want to add to that, yes, the last year has been fabulous for us, honestly, with Jio bringing in so many new consumers, especially from Tier 3, Tier 4. Of course, sustainability doesn't look too bright right now. But I think the extension of broadband is going to be through a partnership of government and private. I don't know if you know, but about 7% of internet consumption is through Indian Railways right now, where Google has worked and has partnered with the government and provided free Wi-Fi. So I think a lot of those partnerships will be needed and significant inroads will have to be made on that. We were very excited when the budget talked about BharatNet and the extension. It's again one of those things that you cannot expect an overnight change, but we are seeing change in tier 3, tier 4 right now.
Yes, sir. Can we pass the mic here, please? The first row.
I'm Ratul Puri from Hindustan Power. First, I'd like to just concur with the panel that I think the reforms that the government has undertaken truly are transformative. I think I'm in a business that engages a lot with the government, and we truly are seeing a government that is engaging, willing to listen, be proactive, and make change. One of the discussions in the last, some of the discussions in the last 2 days of the forum have been around the fourth IR and the impact of the fourth IR, I think, on the world and on India. And one of the fears I have is that, this essentially could potentially create a huge opportunity for India, but also could create a challenge. In as much as a lot of the jobs that traditionally China and many other economies created at the bottom end of the pyramid may not exist in the future. How are we going to potentially deal with this? Because the fourth IR is real, it's here, and it's happening faster than we think.
You want to go?
We are used to facing the challenges head on, so it's okay. See, the fourth industrial revolution is something that will also open up great opportunities for us. We have a very smart, innovative young population. They are really doing enormous amount of work on IoT. That's what you're talking about, right? IoT, robotics, on additive printing, and so on. We are now coming out with a policy in consultation with the stakeholders on how we can actually take advantage and do a transition to Industry 4.0 and smart manufacturing. I think that profile of jobs being created in the country and in any economy is completely changing now. While you may have some robots coming into manufacturing, which in India will take much longer than it is taking in China or Japan or somewhere. But then the kind of efficiencies they bring in, Mr. Godrej talked about productivity, that will actually create jobs in other sectors. See, one of the job creating sectors is going to be logistics, and in this whole, after GST particularly, in retail, I think there are tremendous opportunities of job creation in retail and logistics today. But that requires an efficient and competitive production of goods and services in the country. And that is where all these data, big data analytics, all IoT and 3D printing, artificial intelligence is going to make a big difference. And I can see that with a strong MSME sector, if we do the right policies, we do the right promotion, actually is going to be a game changer for us and for our small businesses and industry as well. But we need skilling. We need reskilling of people. As Mr. Godrej said, we have so many people and we have so many demands of the economy. But you have to match them. So the skilling is very critical if you really want to take full advantage of Industry 4.0.
Do you want to add, Mr. Godrej, or go to the next one?
So I'll just give you one example. This fourth industrial revolution will help India in many forms, as Secretary just mentioned. But let me tell you what happens. Incomes rise in certain sectors as a result. And I'd like to give you what can happen to create jobs just in the fast-moving consumer goods sector. There are only 3 packaged branded items that are fully penetrated in India. That means every family uses soaps, detergents, and matchsticks. Everything else is under-penetrated. Even things like toothpaste and shampoo are under-penetrated. As incomes rise, people start consuming much more of these goods, which then require a lot of people. In manufacturing, yes, considerable people. But as mentioned, in distribution, in logistics, the number of jobs added is tremendous. And that can add significantly to the economy. We shouldn't forget the positive effects it can have in other sectors. I've just given you one example.
Yes, sir. You're right.
Hello, I'm Rishi Chawla from Philips Lighting India Limited. I represent the LED lighting segment. LED lighting is one of the focused vertical of the government of India, and Make in India has seen a lot of results, Make in India story in the LED sector. The manufacturing has grown in the LED sector, and there is a lot of consumption or a lot of demand, like we've heard from Minister Piyush Goyal as well in the previous session. But I want to raise a risk here, sir. We've noticed 60% of the LED products that are available in the market are illegal. They should not be allowed to be sold. They are not contributing to the taxes, to the duties. They are not contributing to Make in India story, in any form to the economy. That's happening only in cash.
Sorry, when you mean illegal?
When I say illegal, they do not have a manufacturer's name and a manufacturer's address. So once you don't have a manufacturer name or address, that means you are not contributing to any of the taxes. They're not into the system, but they are being openly sold in the market. Now, the risk is of law enforcement.
Manufactured or imported also? Are they imported also, some of these?
These are imported as well as manufactured. But because of some regulations, the finished, LED manufacturing or LED assembling is very easy. So components are being imported, and these are being assembled in households, in sheds, as illegal manufacturing, and being sold without any brand, or maybe fictitious brands in the market. And this is a AC Nielsen report I'm citing. So this report has been done by the lighting segment, and we can present to you whenever we meet in the future.
Correct? Sure. Okay. I'm glad we have done something in this area, so I have something to say. See, I'll just take you to the broader question of having quality control orders or technical regulations. In European Union, there are 1,500 quality control orders on various products. In India, we have 150. We have another area of major neglect has been issue of technical regulations in our country. So you can either check whether the quality is there in the imported product or in the domestically manufactured product. We have started this work on a war footing, that having quality control orders for almost every product that we are consumed in the country. And this work has picked up. On LED lighting, see, there is again, there has been some issue of which ministry deals with it. My department, Ministry of Electronics, Ministry of Power, we have sorted it out. The quality control orders under the BIS Act or the compulsory registration order are being issued now. That will take care of any imported stuff of poor quality which doesn't meet the standards. And we are also going to set up this conformity assessment procedures. On domestic manufacturing, which is done, see, the GST is going to issue these questions fully. That's why it's very disruptive. Earlier, there was nobody was tracking. People could buy stuff which was not tax paid. Now nobody can buy stuff which is not tax paid because they will have to pay the tax themselves. So there are a lot of mechanisms with GST, as Mr. Godrej pointed out. It's very difficult to evade taxes under the GST regime. I'm sure some of the ingenious people may still try to find out, but it's going to get more and more difficult as the time passes. Because the use of cash, the direct tax regime, the GST regime, all combined, and the kind of IT database that is being created is going to make it very difficult for this kind of illegal manufacturing. So you should fully support GST.
I really appreciate saw phenomenal growth during the time of demonetization.
Sure.
And also when the GST got implemented in July. But the ingenious ways of these traders or these people, they come back again and with greater force. I don't know how.
Credit Indian ingenuity for that. I have time for one last question. The lady there.
Thank you so much. I'm Nisha Agarwal with Oxfam India. You talked about the rising inequality in India. Whether you look at income, we are second only to Brazil or South Africa, or wealth, we are second only to Russia. So when you ask that question, what is the next set of reforms needed to get a more inclusive India? I'm not sure I heard about reforms. Is it tax reforms? There's an article in the Economic Times on inheritance taxes being introduced. Is it public expenditure reforms? Is it labor market reforms? What needs to be done? Because we're really now at number 2, and we're going to soon be at number 1 if we don't look at the inequality issues really as part of the major problems that we are facing.
You want to go?
Well, it's very good to go for growth which is inclusive. But I don't think inclusive growth means we should look only at the ratio of highest incomes to lowest incomes, or only to the ratio of highest wealth to lowest wealth. We should look to, is the lowest wealth increasing sufficiently? Is the lowest income increasing sufficiently? Free enterprise-based growth, which is the best known growth system in the world. People have tried a lot of other things like communism, etc., and rejected them, does mean that the more capable people will tend to do better. But what is most important to bear in mind is, are the bottom layer increasing their wealth or income strongly? For example, the statistic in India is that below poverty level population has come down very considerably, which is to my mind a good thing. So I think economically we should study what are the important markers. Just in communism, perhaps these ratios you talk about might have been best, but there was no growth. So what's the use of having good ratios without growth? We must have high growth and then the best possible ratio.
Keiko, sorry, you want to come in on that?
No, this is
Okay.
okay.
I think reducing inequality is one of the most important duty of any government, absolutely. But while reducing inequality is important, we also should look at the per capita income of the people below, at that lower rung of society in terms of income. I think 80% of our people work in the MSME sector, contributing to 20% of the value of the output. So there is a tremendous underemployment among the 80 to 90% people in the country. In China,
the transaction which I spoke about, in State Bank of India also we have a massive program which has been taken our global IT center Belapur, and in 3 years time you will see a bank which has completely transformed it to itself. And there are a couple of dimensions around technology. The first is of course the consumer experience or customer experience. How do we serve our customers, which is a huge mass, 420 million customers, serving them in an efficient manner, keeping the costs under control, using the technology for superior underwriting model, using data analytics for driving business growth, data mining of this 420 million mass. That itself offers a big opportunity for the State Bank of India to grow the business. So if we leave aside the corporate credit front, on which there are huge challenges which bank and the banking industry is facing, but otherwise in terms of opportunities, I am very optimistic about the unfolding scenario. Infrastructure is another story where the potential is unlimited. And if we look at the infrastructure in India, and if we compare it to any other country, even the neighboring countries, there is a lot of investment required. In a city like Mumbai itself, I would feel that you can invest 5 lakh crore over a 5-year period, and even that may not prove to be sufficient. So infrastructure, consumer spending, these two are where there are huge opportunities for the bank, and bank is well positioned to capitalize on that. The issues around corporate credit, we are already in discussion that how do we revive the credit growth, how do we resolve the NPS, and that discussion we will try to bring it to a conclusion very quickly, and you will see some changes on that front.
Another key area would be the manner in which you integrate the subsidies following the merger. What challenges do you see in this regard, and also in terms of HR initiatives, what are some of the steps you want to undertake in the coming months?
So I will answer your second question first. On HR, we have initiated a project called Project Saksham, which has been going on for last 3 years. And it touches all dimensions of HR, starting from attracting talent, nurturing talent, and develop talent, plus performance improvement plan, career development system, postings, transfers, everything, whatever you talk about HR. And I am very happy to say that you would have all read in the newspapers that we are now considered to be one of the best employers or the workplace along with likes of Google. So that is again a matter of great honor and pride for us that SBI today is considered to be the best workplace to work. So that gives us a lot of confidence that with this news, we will be able to attract talent, and we are very open now even to attracting lateral recruitments at various levels. We have had certain recruitments in key positions where we have taken people from outside, and we have been able to assimilate them very quickly. So talent for State Bank of India will not be an issue because the brand itself attracts a lot of people. I have been involved with interviewing many people for senior positions, and many times when I ask them what attracts you to State Bank of India, and they all are giving only one answer, that the kind of exposure and the reach which they can have with the State Bank of India is not available elsewhere. So we have our positives on HR side, and development of skills definitely is an issue with the industry as a whole. Despite the fact that the State Bank of India is considered that it has very good talent as far as banking industries go, but development of skills, we have already created a new institution at Calcutta, State Bank Institute of Management, where we are expecting that we will be using that institution for innovation as well as leadership development. So we have a definite plan for development of our HR resources, and that is one of the topmost priority as of now and will remain topmost priority going forward.
देश के वर्तमान आर्थिक सिनेरियो को आप किस तरह से देख रहे हैं, और क्या आपको लगता है कि जो भी परिदृश्य इस वक्त आर्थिक जगत का है, कल प्रधानमंत्री ने जो बातें कही उसके बाद उसमें कोई बदलाव आएगा?
देखिए, जहाँ तक आर्थिक स्थिति का सवाल है, अगर थोड़ा सा जीडीपी का ग्रोथ कम हुआ है, जैसा कि आपने भी पढ़ा है न्यूज़पेपर में, मैंने भी पढ़ा है, तो उससे मुझे नहीं लगता कि कोई घबराने वाली बात। अभी जैसा मैंने कहा कि देखिए, आपका जो इंफ्रास्ट्रक्चर की जो स्टोरी है वो अभी भी अनफोल्ड हो रही है, और उसमें इन्वेस्टमेंट की अपार संभावना है। उसके साथ साथ कंज्यूमर कॉन्फिडेंस में इतनी कोई कमी हमें नज़र नहीं आ रही है, और हमारे जो इंडिकेटर्स होते हैं, हाउसिंग लोन हमारा पोर्टफोलियो कैसा कर रहा है, ऑटो लोन पोर्टफोलियो कैसा कर रहा है, तो अगर मैं उसकी तुलना पिछले वर्षों से करता हूँ तो उसमें वृद्धि हुई। अभी भी सितंबर में एक छोटा सा उदाहरण दे सकता हूँ कि हमने 50,000 कार फाइनेंस किया, जो कि पिछले साल से 20% ज़्यादा है। लास्ट ईयर अक्टूबर में हमने 55,000 कार का जो है फाइनेंसिंग किया था, और हमें उम्मीद है कि हम लोग अगेन उस टारगेट को एक्सीड कर लें। तो आई थिंक कि एक पेसिमिज्म के एनवायरनमेंट से कोई काम नहीं चलता है। स्ट्रेस्ड एसेट्स का जो एक इशू है इंडस्ट्री का, उसको रिजॉल्व करना और जल्दी रिजॉल्व करना, ये एक इशू मैं मानता हूँ कि जितना जल्दी ये इशू रिजॉल्व होगा उससे इकोनॉमिक रिवाइवल में बहुत हेल्प मिलेगी।
So have you made any new strategy, जब आप कहते हैं stressed assets के लिए, NPAs के लिए, have you made any new planning and new strategy?
इस बात का मैं ये जवाब दे सकता हूँ कि पहली बात तो ये है कि मैं इस बैंक में पिछले 28 महीने से मैनेजिंग डायरेक्टर हूँ, तो जो भी स्ट्रेटजी बैंक में बनती उसका मैं एक अभिन्न हिस्सा। तो स्ट्रेटजी ऐसा नहीं है कि आज जो है क्योंकि एक बदलाव हो रहा है लीडरशिप में, और कल लीडरशिप में बदलाव हुआ और आज सुबह जो है मैं कोई नई स्ट्रेटजी एकदम बना दूँ, ऐसा नहीं है। लेकिन स्ट्रेटजी पे काम हो रहा है। अभी उस काम को जो है एक कंक्लूजन हमको लाना है, और वो अब शीघ्र विद इन ए वीक आप देखेंगे कि जो बदलाव की बात एक आप कर रहे हैं, तो उसको फाइनल शेप बस देना है। और जो हमारी एग्जिस्टिंग टीम है, मैनेजिंग डायरेक्टर्स हैं, वो पिछले कई महीने से इस पे काम कर रहे हैं, और एक वीक का आपको अभी इंतजार करना पड़ेगा। No, all of you know that stressed asset is the top priority for the bank. What is currently happening is that lot of management time is being spent on resolution of stressed assets and tackling of stressed assets. So we are thinking that how do we segregate so that stressed assets is looked after by certain set of management team and people, and our normal lending activity. Is there a way we can segregate? And there are two different senior people who can handle both the portfolios separately, so that it is not that everybody right from chairman and down the line, everybody is just talking of stressed assets and dealing with stressed assets. So there are certain finer points, as I said, that please wait for some time, and you will get the idea that in what direction and in what manner we are going to tackle this problem.
Okay, that was Rajnish Kumar, the next chairman of SBI. But back to the show. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Joining us on the show today is Ashish Chaturmota of Sanctum Wealth Management, and he says that the market may see some consolidation between the 9800 to 9940 level mark. Amit Jaswani of Stallion Asset is long-term bullish on the market, and Samir Karra of Target Investing says that trade the dips and invest in the fall in this market. Today on Hot Money, we will discuss stocks like Bharat Forge, Bata, Dilip Bilkon, ITC, Aurobindo Pharma, and the newly listed Capacite Infra. Let's move on to the first stock, and that is Bharat Forge. Yesterday, the US auto sales numbers came out in terms of the Class 8 vehicles. Extremely strong for the fourth straight month. We've seen a growth that is coming in. What's the view for Bharat Forge? How does it benefit, and are there other avenues for Bharat Forge to go? Let's talk to our guest. Amit, do you like Bharat Forge? What's your view on Bharat Forge?
It's been at a cyclical low now. So Bharat Forge, the US, as you rightly pointed out, the truck sales were down 40% last year. They've moved up this year. So it's at a cyclical low last year. So the EPS is expected to grow from 13 this year to about 30 next year. So the return on equity would be 28. This is a completely debt-free company, and we're very bullish on this. Basically, it's at inflection point. So going forward, good days are ahead for this company.
But apart from this truck sales, which other avenues? What about defense? What about oil and gas? Are those avenues growing for Bharat Forge or no?
So they've just got a new defense order worth 200 crores right now. This is very early stage in the defense cycle, but we'll get a good hang only when they start executing. But they were very bullish on the con call about the defense business, but it is too small a business for them right now. But going forward, we'll have to look at this business.
Okay, so you're bullish on Bharat Forge. Samir, do you like Bharat Forge?
I'm bullish on Bharat Forge.
Okay.
Mainly because of two reasons. First of all, US truck orders this quarter have been around 62,000 as compared to last year same quarter around 38,000. That time itself the capacity utilization was 62%. So now even if a 5 to 10% increase in capacity utilization comes, so that EPS growth major chunk should come in this quarter or next 2 quarters itself. On the defense side, recently DRDO tested with a particular long-range guns, which was a collab between Bharat Forge and Tata. Okay, and that's around a $4.5 billion order. So that will start the ball rolling, and positive results came out of that DRDO. So I'm a little bullish on the defense side more, because the current business is already creating cash for them. It's more important for us to see whether the defense is more cash generating.
What about the domestic business for Bharat Forge? Is that growing?
Domestic business has a little bleep because of the private capex is not churning up that much. But yeah, as the CV cycle out here also is showing a little signs of being upbeat. There are positive signs, but I'm not that bullish as of now for the domestic business as such.
So overall you're bullish. Ashish, do you share the same view as Amit and Samir? Are you bullish on Bharat Forge?
Yeah, Darshan, definitely. So first of all, if you put a technical perspective to the stock made its all-time high around in 2015, and post then it has been into a consolidation phase. Now we are seeing the stock post bonus has started seeing a lot of buying interest, and it has formed a strong rounding bottom formation on the monthly charts, which is very, very positive. Keeping that in mind, I think this stock has a potential to test 800, 850 kind of levels in days to come, and definitely there are a lot of fundamental triggers to it. First, obviously, we are going to see increased order from the North America in terms of trucks, and obviously the capex is at a very, very low level, and any increase in the capex, I think Bharat Forge is going to be a major beneficiary. So keeping that in mind, I think Bharat Forge is poised for a 15 to 20% upside, at least in a short to medium term, and for that, I think technically speaking, 580, 600 should act as a very, very strong support for the stock.
Okay, so it's a consensus bullish call that's coming in on Bharat Forge. All our three guests do believe that the potential upside for Bharat Forge is here to play. Let's move on to the next stock, and that is Bata. The trigger for Bata could probably be the Khadim IPO that could come in. Footwear stocks over the past few months have been rather active. Today Bata is down in trade, but what could be, because we've seen that, you know, when a peer list, the companies which are already listed, they actually see a big bump up. So with the Khadim IPO coming up, what does it mean for Bata? And apart from it, what is there for fundamentals in Bata? Samir, let me start with you. Do you like Bata?
I'm a little neutral towards it right now. I'm not bullish in a certain sense or bearish, because past 2 years there has been a lot of changes in the business or the way of conducting business. In terms, the stores have been implementing ERP, which was a major drag last year. Now there is somewhere a settlement going on. The only thing with Bata which makes me a little skeptic is in 2003 to 2009 they were conducting business like a cash and carry. Then 2009 to 2012 they were conducting it as a franchisee, and then now onwards they are creating a manufacturing. So even if you're selling the same thing for so many years, the way you change the business makes me a little skeptic on it, that another 2 years you'll change it. But currently a IPO listing can give it a little upside, depends on the valuation it lists on. Otherwise there are better opportunities in the same industry.
Do you believe, Amit, better opportunities, or would you stick to Bata?
See, the first thing we look when we see a fashion retail stock is inventory turnover. The world is moving towards fast fashion. If you look at Zara, the inventory turnover is 45 days, H&M 50 days, even Nike, it's 60 days. So for us, the most important ratio that we look out is inventory turnover.
How much is it for Bata?
And it's about more than 100 days for Bata. Relaxo is better placed with 60 days. So Bata is more for a mutual fund guys who are looking for 10-12% returns. But this is not a stock for HNIs or retail investors looking to CAGR their money at 25% plus. It's going to be a slow mover, good long-term bet, 10-12% compounding kind of story. It's not
but
something.
That, okay.
Yeah, you can.
That gives you more consistency, right? Whether you'll take more volatility in your hand or more consistency. I think retail investors or HNIs at a certain long-term bets look at more consistency in numbers rather than the volatility of the management or the stock itself.
So
right?
Relaxo would give you the same this thing, right? So all I'm saying that Relaxo is a lot better than Bata. If you're playing the footwear space, Relaxo will give you more returns. There is some GST benefits that these guys get because the average ticket size is less than 500 for both these players, for Relaxo as well as Bata. But we believe that Relaxo will benefit a lot more. Relaxo is better managed than Bata, and brands having 11-12% operating margin, you're not a brand anymore, right? So we're very neutral on Bata.
Okay, Ashish, what's your view on Bata? Do you like it?
So we like it, and again, first a technical perspective, stock made its high in 2015 and was in a very strong consolidation phase for last 2.5 years. We saw a very strong delivery volumes picking up in last 3 months, and which has taken stock from almost 400 odd levels to 650, 670. And keeping that in mind, I think this stock has been in a radar. Obviously, it's going to be a sector call, as you rightly mentioned. Yes, Redico. If someone is looking for a Relaxo, if it is someone is looking for a higher return, then yes, definitely Relaxo looks much better on a technical perspective.
There was a chart that showed, if my producers can put up, I think Relaxo has been a marked underperformer compared to Bata. I think I saw Bata move up 47% compared to Relaxo's 12%. Relaxo in 3 months has done nothing. There was a chart that had
Liberty is much better.
So Relaxo is 4% in the last 6 months, Bata is 28%, Liberty is 44%. So would you still bet on a Relaxo?
So I'm comparing Relaxo with Bata, but between these two guys, Relaxo is a better bet for very long-term investors. They'll compound your money at very higher levels compared to probably at 18 19% compared to a Bata at 12%, and with exactly the same risk. So the risk is not very high.
Okay, so that's the view that's coming in on Bata at this point of time. Ashish is bullish on Bata, both on the fundamental and technical pick. Amit would say that he would prefer Relaxo. Samir is rather neutral over Bata, but said for a retail guy to compound over a long period of time, yeah, Bata is a stock that you can look at. The next one is Dilip Bilkon. Infrastructure as a space has not been doing well, but Dilip Bilkon's on a tear today. It's up almost 7%. Will the private capex come in? Will the government spending increase? What's the view for Dilip Bilkon? Amit, you track Dilip Bilkon very closely, I hear. What's your view on Dilip Bilkon?
So last time I'd come to your show, I had given Dilip Bilkon 6 months back. The stocks rallied. We're still extremely bullish on this space. See, the thing is, if you see the balance sheet of the top 10 road builders, 8 of them cannot bid the next project. It's that bad. There are only few companies who can bid projects and fewer who can execute them, right? So Dilip Bilkon executes 95% of its projects before time.
Okay.
So government spending will pick up on infrastructure, and we're very strongly positive. This guy has the highest EBITDA margins. In fact, 2.5% of its EBITDA margins comes because of bonus of completion before time. So you look at, when you see an industry where other players can't compete, this guy's already also sold 1,700 crore worth projects to Chatwal Group lately. So this guy gets money to pay off his debt, as well as he can bid for new fresh projects. So going forward, this guy has 10% market share in the HAM project side.
Isn't debt a concern? I believe they have a 2,400 crore debt on the book.
It's about 4,000 crores the debt, but 1,700 crores will get paid off by 2019. They don't need any capex, and all that capex which was done on equipment side. We believe is a strong growth story, as well as great execution skills. Till the time the promoter's executing, we have nothing to worry.
Okay, so that's the view. Ashish, your view on Dilip Bilkon?
Very positive. I think this is one stock within the entire infrastructure space which is looking very, very promising. And I think we also recommended around 600 odd levels recently, which is reasonably done well. I think the stock has a potential to give another 20-25% in a very short span of time. And obviously, if you look at the industry operating margins, it's very, very good. The management has given guidance for financial year 18, which is again very, very encouraging. And I think government thrust on infrastructure, it is going to increase the order book, which is going to get translated into the numbers. So I think broadly, Dilip Bilkon is one of the best bet within in the entire space.
Samir, we got a two thumbs up for Dilip Bilkon. Is there a thumbs up for you or down?
No, I'm a little bearish on the stock.
Why?
See, in the short and medium term, infrastructure companies, when the order books keep on increasing, they keep on doing well, right? But the main structure is you have a working capital issue over there in that field, right? And that working capital has to be financed by the debt. Now, the whole point is in 2014, if I see as a shareholder, EBITDA, the operating profit they were creating, 30% was going towards the interest payment. Now, as you grow, that ratio should remain same. If that increases, then you have a trouble in the system.
Has it increased?
So that has come from 2014 30% to 41%.
Okay.
So that is the major concern for me.
Would you want to respond?
As they might bid out other players, I'm not worried about that. But the whole point is, if you go too aggressive, then somewhere or the other, there will be a sale of asset, there will be the same issues which come in a regular infra company.
Yeah, very quickly, you want to respond to that?
First of all, the receivable cycle for Dilip Bilkon has come down from 170 days to about 100 days now. This is point number one.
Yeah.
Point number two, so the working capital issue gets resolved there. And it will come down lower as the HAM projects which is being sold. It's the first time in India someone's been able to sell HAM projects, and this guy has sold HAM projects which are not even constructed, right?
See,
so this guy is, it becomes from a HAM player to an EPC player. So you are getting the highest industry margin. So these guys have not been very aggressive on bidding because they have the highest industry margin. There is no one who's got more than.
But the whole point is, if the margins are higher, that should come to as a shareholder to the EPS part to it, right? Eventually, if you have a higher margin and you're paying a higher interest, that proportion also increases, then you really don't get the benefit of it. That's my point.
Okay, so that's the view. Our viewers have both views of both the side. So that's the view coming in on Dilip Bilkon. Amit and Ashish are bullish on it. Samir has a little bit of concern on Dilip Bilkon and he's bearish. Before we move, here's a quick recap of all the stocks that our guests have covered till now. Okay, the next one is the big boy itself, ITC in the FMCG space. What's your views, Samir? I believe you're bullish on ITC.
I'm bullish on ITC mainly because of one reason. See, cigarette business is not my concern because that has absorbed so many excise hikes and still is able to get that margins, and always there is a pessimism which comes in before the budget and it always goes out after the budget. So that is not the concern. My whole watch out is for the consumer part, the FMCG part. Now they recently told that they want to do a 1 lakh crore by 2030. Now that gives a next 13 years 17 to 18% CAGR growth, which they need for the FMCG. That can be done, and I would rather look out for that, because in past 13 years Britannia has done the same rate, Nestle has done the same rate.
You think they can do it?
So they can also do it, plus the whole benefit which Britannia or Nestle didn't have, they have a cash flow of the cigarette.
Okay. Ashish, what about you? ITC, do you agree with him that that's a bullish call?
So I think it looks little neutral, a lot of uncertainty, and if I have to play the FMCG part, then I think stocks like Britannia, Dabur, Nestle for that matter looks very, very interesting.
Why not ITC?
So ITC,
what's the concern basically?
So I think a lot of taxation structure is still not clear, and that's the reason I think the stock has underperformed significantly, and going forward also we don't see any major clarity on that front, and I think that can lead to drag the stock. Maybe it might not correct, but we are not going to see a very, very meaningful returns from current.
Amit, your view on ITC?
See, this again is a mutual fund type of stock. These are not this type of companies that we actually invest in. These are for people who are looking for 10, 9, 12% kind of returns. That what is there that and people don't know in ITC, right? So the cigarette business is cash generating, and they're investing that huge cash flows. In some 70% is dividend payout, 30% is invested in the new businesses. Now it depends on how new businesses do. These are not our businesses, not our choice at all. We are very neutral, but it's not bad for a long term because there is a lot of longevity of growth in the cigarette. But cigarette is being impacted a little by the illegit market, and wherever we travel a lot, so wherever I see there's a massive increase in illegit cigarette.
Okay, so that's a view that's coming in on ITCs. Samir is bullish on ITC, but there seems to be a little bit of concern from other two guests. The next stock, Aurobindo Pharma. Is it the worst over for pharma stocks? Aurobindo actually has been able to ride the tide slightly better than the other companies. Ashish, let me get your view on Aurobindo. Do you like the stock?
Yeah, so it looks very interesting, and this is one stock which has been mostly immune from the US FDA issues, and obviously and also if you look at, they have been able to compete despite low R&D expenditure. So again, a very interesting thing, and I think technically it's a very strong pattern despite the kind of correction we have seen in the entire pharma basket. This is one stock which was consolidating, so I think this stock might soon hit a level of 900 to 950, and I think this is one of the best bet within the pharma space.
Amit, do you agree? Do you like Aurobindo?
So we as a whole, we believe pharma was the leader of the previous bull market, right? The pharma index went from 2000 in 2009 to about 14,000. They went up 7x, and these guys didn't even correct once more than 13%. So we turned bearish on pharma 2015. We rode that trend, we turned bearish on pharma. So pharma as a whole, it's now a time where smart investors should use mutual funds to accumulate the pharma space and not go stock specific themselves. But among all pharma stocks, we are very bullish on the emerging market pharma side. So that's where real growth is gonna come. Coming to the Aurobindo, it's a better than all those other guys. There were two concerns basically. One was the US FDA risk, and one is the pricing risk. For Aurobindo, US FDA risk was never there, right? So the pricing risk continues to be a pressure, but it is better placed, cheaper than all other companies, and large percentage now formulation is not an API player anymore. So about 80% is now formulation. So it's not a so right now it'll be in this low cycle, but once the cycle turns in pharma, I believe Aurobindo will be the first one.
Samir, do you believe that there is a growth? It's cheap. It's no doubt it's the cheapest, one of the cheapest, but somehow the market does not want to give it that value.
See, right now, whatever happens, whenever, at least in past few bull cycles I've seen, whenever the infra space is going on, pharma and IT never performs. Right. My only concern, or I like Aurobindo on mainly one thing as compared to other pharma companies, is that it's one of the only firms which is integrated firm. As in all the raw material which they need for making the products, 80 to 70% they have their own supplies.
Okay.
So that helps them to make a cheaper product. So the US FDA or the pricing is not the major concern for this, because the pricing of the products is already cheap. And they always fight the markets or the products in US which is very competitive and the pricing is already low. So for them the main advantage is the cost advantage, which will not change whether the 2012 or 2013 or 14, whatever the bull market is happening now. The second part is, in recent past the US FDA filings have been more than all the three largest players combined.
Okay.
So that will give a leg up to next growth cycle of the firm.
Okay, so that's the view that's coming in on Aurobindo Pharma. And the last stock, we're running out of time, but let's take this quickly. Capacite Infra recently listed. What's the view after that? The counter has had a good rally after listing. Amit, you track the company very closely. Let's get your view first.
We're super bullish on capacity. I'll tell you this story. If you see the top 10 city market, 20% is with the large builders, 80% is with the smaller unorganized builder. With RERA coming in, these 80% builders cannot, you're not getting pre-booking, right? If Godrej sells a project, he gets 1,000 crores of sales in a week. If Omkar sells, he gets 300 crores of sales in a week. If Oberoi sells, he gets 600 crores of sales in a week. So the organized pie is taking over the market share of the unorganized pie. And now the market share is 20% organized and 80% is unorganized. And believe me, this trend is going to stay for a very, very long time. With capacity, it's a new 5-year-old company and it's been growing at 70-80% since then. Paragon, HDFC's Paragon is backing this company and they hold a large stake. Now this company is into towers. It's into construction of towers. They have displayed excellent excellent execution of projects. They have clients like Lodha, like Trump Tower in town in Bombay is being made by them. That's India's most prestigious project. Right?
Why would I'll have to stop you because we're running out of time. I need to give our other guest very fast, Samir.
So I like the company for what it is doing. It's just that now they're trying to expand to other cities and affordable housing, since it's a labor-intensive system. Now, when you go into another cities, how the expansion plan gets executed, I'm mainly concerned over there.
That's the big concern. Ashish, your view on capacity?
We don't track this stock, so I think I'll skip.
You want to respond to it, the concerns of...
See, if you see, Prestige took them to Bangalore, right? Kochi was taking to... Kochi they went because Puravankara took them. When your clients themselves are taking you to different places, you understand the clients are so big, the Lodha, Oberoi...
I agree.
So they are doing something. Why would your client take you to some place? Because you're doing something great. So the only two competitors they have is L&T and Shapoorji Pallonji. They are taking on market share. They have 1100 crores of revenue this year. Their order book is already 4,600 crores, and let me tell you, 1,500 crores of this order book came after demonetization. Okay, so the organized industry is absolutely not impacted.
Okay, so that's the view that's coming in on capacity. Amit seems to be extremely bullish on capacity Indra. Ashish does not have a view, they don't track it. Samir has a little bit of concern, but he did mention that you like the company, it's not a bad company. So before we wrap the show, here's a quick recap of all the guest views that we've had on the stock covered so far. Amit, Samir, Ashish, thank you so much for joining us. With that, it's a wrap on Hot Money. Thanks for watching Bloomberg Quint.